But on that note, let's welcome Nrupesh Shah, Managing Director, Corporate Affairs at Symphony. And Mr. Shah, welcome to the show and wishing you a very good morning. It's been a stellar Q4 for you, stellar set of numbers coming in. The stock price is also reflecting that today. First of all, help us understand what has worked out for you this quarter to an extent where you have reversed losses. You are in profitability compared to Q4 this time last year. Give us a sense of what this quarter has been for, and sharp moves coming in on revenue, top line, bottom line, both have grown significantly. What has driven this growth this time?
So as it was indicated and guided earlier, we came out with series of new models, and that launch was starting January and February onwards. They have received overwhelming response. That's number one. We have penetrated reasonably well in the rural and semi-urban market across the channels, in addition to general trade, also large format stores, e-commerce, D2C. Thirdly, we have also now decent amount of contribution in terms of the sales from non-household air coolers, which consist of large space ventilated air cooling, kitchen air coolers, tabletop air coolers, geyser and spares. And they are selling round the year or counter seasonal, having decent margin profile also. And in addition to that, it was also supported by early decent summer starting second week of March. And in addition to that, our overseas subsidiaries, particularly GSK China, Brazil, and IMCO Mexico, have also registered robust performance. However, climate technology, which is now on block, hasn't performed and delivered well.
A very good morning to you, sir. The shadows are joining in the conversation, and you did say that you have a lot of models that have actually also aided your performance in the quarter gone by. Are you seeing the similar sort of a demand trend, at least now in the current quarter that we are in, that is Q1? Are you expecting that sort of a trickle down effect that you saw in Q4 to actually trickle down in Q1 as well?
Sure. So starting April, it has been a subdued demand on account of rains and erratic summer in many parts of the country. However, in whichever parts there was consistent 7 to 10 days of heat, it has witnessed decent demand. So if we exclude June 25 quarter, which is a very high base, and there was a consistent throughout the summer across the country, decent summer, vis-a-vis all our earlier quarters, performance has been decent. But we have to keep in mind, still for summer, especially in northern India, western India, central and eastern India, 7 to 11 weeks have to go. And if there is a 7 to 10 days of consistent heat at any point of time, then again, it will see a decent traction, and we are geared for both the scenario.
Okay, sounds good. Mr. Shah, I also want to understand, you spoke about the good performance that your subsidiaries also have seen. However, you are looking to exit two of your subsidiaries, and that's your Australia and Mexico subsidiaries. Can you help us understand what's the rationale here, given both of these subsidiaries are doing well? How are you defining global triggers? Is that something that is pressuring you to exit your subsidiaries? Is it everything that's been happening on the geopolitical front? What's the rationale behind exiting both of these? I understand that you want to pivot your focus on the US market, which is a big opportunity for the company. Help us understand the rationale behind this exit from Australia and Mexico subsidiaries and not necessarily the geographies.
Sure. So first and foremost, we wish to focus and use the management bandwidth completely on large opportunities, quite profitable and growing opportunities in various segments in the country. So whether it is adjacent category, LSV, across the trade channels. Secondly, our Brazil model and China model are working very well, which we are continuing. And through that model and the rest of the world, we believe that we can explore the global opportunities, particularly to USA as well as Brazil, more effectively. That too, globally, Chinese players are in our competition, and in current geopolitical position, we see a huge potential. So that's number one. Number two, climate technology Australia, as it is evident, financially so far hasn't done well. In fact, we had to also take some impairment on that. However, on account of series of transformative measures which we have taken, we expect that still we can expect some decent value. As far as IMCO Mexico is concerned, we have really taken it to a next level in many respects, including many products have been launched. It is consistently growing very well, and we believe that on our peanut in equity investment of just rupees 20 million, it can be a huge value driver once we monetize. And thirdly, both companies put together, particularly on account of climate technology, where huge capital is employed. So
Right.
that help us to have much more effective and efficient capital deployment.
Right. Right, sir. Point taken. I'm sorry and apologies for that because we have paucity of time-bound break that we have to take. But nevertheless, I must say that excellent performance in the quarter gone by, and your commentary and the way how you are actually talking about the strategy going ahead, which means that FY26 also will be a good year, a great year for Symphony, isn't it?
We hope so. Let's keep the finger crossed.
Definitely, fingers crossed. And on that optimistic note, thank you so much for joining us on this edition of Buy Now, Sell Now, and also talking to ET now about the quarter gone by. That Symphony stock is soaring in trade, but we are out of time on this edition of the show. Goodbye. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.